Yeah, look, I think the Saudi contingency plans seem pretty solid at the moment. I mean, clearly they are taking crude from inventories. I think if you'd notice, some of the domestic refineries are running at low processing rates. So clearly preference for the export markets, like they've said. And also there was some spare capacity there. So, they would have been prepared for the, contingency in terms of supply outages, etc. And so far, while you can't discount, like you were saying, about volatility further on, so far, they seem to be able to manage this.
What's your outlook then when it comes to the oil markets going forward? Of course, the situation remains particularly unclear. We know that the US Secretary of State, Mike Pompeo, is in the region. He was due to speak to the media yesterday, but postponed that conversation until today, it seems. Meeting with the Crown Prince of Saudi Arabia. Clearly, the United States is saying a lot about the options that it potentially has on the table. It's ordered an increase in sanctions against Iran to begin with. But with all of this geopolitical noise out there, how do you navigate and, I guess, forecast oil going forward?
Yeah, so JP Morgan did a scenario analysis with the Saudi outages, and look, if you think that we'll have 5 million barrels per day out for another month, we think oil prices, Brent, could move up to $75. Now, if that month turns into 3 months, then maybe we could even get up to 90. What they've said is a week capacity, they can get back some, output back up to a normalized level. So, our base case forecast prior to this event was around $64 Brent this year, and we've got 56 next year.
Would a move to those levels, if we see outages as you have game planned over at JP Morgan, then see the United States unlock some of those strategic oil reserves? And what level do you think we'd have to see oil prices go to before the United States really stepped in?
I think more of the concern around, let's say there was higher prices like our scenarios are forecasting if the outage is more prolonged, I think is actually more on demand. I think even prior to this event, demand, particularly out of the US and China, was particularly weak. Even our own forecast, global oil demand growth, we've got at around 0.9 million barrels per day this year and next. So I think more of a concern, if you did have a near-term spike, wherever the price is, 75 or what have you, then it's the impacts actually of demand for the following year. And already on our balances, and let's say this is a temporary outage, we already had the market gradually getting into an oversupply position as we come into this sort of the end of next year. And then we'd also, with the OPEC meeting early December, had suggested on our balances that the OPEC members may well have to actually increase cuts post March 2020.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.